Welcome back to Best Prop for You. US crude oil is actually crashing today, dropping to its lowest level since early March. This massive sell-off, of course, is being driven by two massive fundamental catalysts. First, the signed memorandum of understanding between Iran and Trump, which, of course, it's an interim agreement to reopen the Persian Gulf shipping routes. Several vessels have actually crossed the Strait of Hormuz already. And second, we had a quite hawkish Federal Reserve yesterday. The FOMC dot plot now shows only a rate cut actually for 2026, and they raised also the inflation forecast due to the recent Middle East conflict. Also, Fed Chair Kevin Warsh, his first meeting, was not really as dovish as many would have thought. So now looking at the weekly chart, and this is where it matters to look at this contextually in the longer term, we are seeing a breakout below the middle Bollinger Band. And this is a very big breakout, given, of course, that we came all the way from the top. So there is potential to go all the way to the bottom, which is close to 50. We have a very strong level here to take into consideration around the 83 level. And importantly, of course, major resistance that could turn support at around at 66. Does this really, because we had a double bottom here, right, match, align, given the leg to the upside with any of our Fibonacci levels? Well, the 16.8 is also broken at around 80. And the 78.6, which is a deep, it's very close to our drone support. So we can consider this as an important zone, the 67, 68 level. Second week in decline. And importantly, the RSI is still far from reaching oversold territories near 30. And contextually, this is very, very important. Down on the daily, because we do like to do MTFA, we could actually, let me take this off. We were looking at this as a triangle at some point, but of course that failed to the upside, however, not to the downside. Let's not forget, triangles are not just bullish. This is, for example, a triangle, but as part of a corrective leg, which would have actually begun from up here. The triangle ends here, and then we have another correction to the downside. Why am I showing you this? Because the Bollinger Bands are expanding, and the median and the lower are looking down, and we have had consecutive days in decline, which suggests that we must, as traders, go and have a look at the this particular pattern as an ABC correction. This ABC correction would be something like, or W, X, and Y, you call it what you want, A, B, and C, which brings us down to around 56. So if, okay, the area here around 67 to 65 to 68 breaks, gives way, then we could be looking to go all the way down to 56 and perhaps the bottom that we saw back in December of last year around 55. Okay, so which isn't far from the 50 we identified earlier. Now we do, however, see the daily RSI being in oversold territory already. So there is potential for a bounce. However, even if we do see a bounce, we might face resistance either at the bottom over here, which is around the 79 level, or even all the way up to 80 to 70, 83, let's call it. So any bounce potentially could go up to here or here, and then could decline lower for the next support, which is at 66. Obviously, we are going to look further down a little bit, also on the 4-hour chart. So let me just quickly delete these because I'm not sure how important they're going to be. Given the 4-hour chart is probably going to show us a little bit more in the shorter term, something like a flag pattern, which I would be probably draw from here to there, from there to there. And one thing that I need to mention, however, is that although that in terms of price action might be looking like a flag patterns typically do not fall as deep as below the 61.8 and the 78.6 Fibonacci retracement levels. Another important thing to take note here is that we have been falling consistently below the 50 Fibonacci without even a retest. Okay, and importantly, we did have an attempt to break higher, but the 79 level actually created a rejection and a resistance level, which we'll have to pay attention for in the short term. We do see some sort of divergence or flatness of the RSI and price action being driven lower in relation to the RSI, which suggests perhaps a short-term move to the upside. However, I would be keeping most of my eggs to the downside basket, to be fair. And given that we are mainly downward looking, I will be taking into consideration the 23.6 slash median Bollinger Band cluster as the potential level resistance with the 79, of course. I will be taking that into high consideration for a short position in case we do see this bounce. Of course, if we don't, that means that we're probably going to fail crossing above 76.40 or so, and would essentially, ultimately decline to the downside. So remember that this triangle pattern we were talking about for weeks, it failed, right? But not to the downside. So the Fibonacci extension here is important. We're looking at perhaps even going down to 62, 60s, and perhaps 50s. If you're looking to short, of course, I would be waiting for that move to the upside, because that would give a much better risk to reward ratio, and it would also confirm, of course, perhaps a double top here, or a much more important resistance level. So trade safe and respect the macro trend.